$3 trillion. Gone, wiped out in 2022, and now it's coming back in 2025. This isn't just a crash, it's a shadow. They say history doesn't repeat, but it rhymes. In crypto, it screams. 2011, Mt. Gox, the first great fall. 850,000 Bitcoin vanished. A ghost story was born. Then 2014, the echo, a brutal, grinding bear market that bled dreamers dry for over 400 days. Everyone said crypto was dead. They were wrong. 2018, the ICO bubble burst. The hangover after the biggest party in history. Projects that promised to change the world became digital tombstones. Billions vaporized, and then 2022, the year the institutions fell. It wasn't just retail getting wrecked anymore. This was a contagion, a massacre. Every crash was bigger, faster, and more brutal than the last. A cycle of greed and fear painted in red candles falling like rain. But 2022 was different. It left behind ghosts. Here lies Luna, a stable coin that became the anchor that dragged an entire ecosystem to the bottom of the ocean. Its death spiral was a black hole consuming $40 billion in a week. Over there, FTX, the golden child, the savior, run by a king in shorts, and here, 3 Arrows Capital, 3AC, the smartest guys in the room, they said, they gambled it all, leveraged to the sky, and when the market turned, they were the first to evaporate, leaving a trail of destruction. Celsius, your keys, your crypto, not really. They promised yield but delivered bankruptcy. These weren't just market corrections, these were betrayals. Digital ghosts that still haunt the blockchain, reminding us that no one is too big to fail. So, how do we know what's coming next? It's all written in the cycles. The crypto market breathes in 4-year cycles, all centered around one seismic event. The Bitcoin halving every 4 years, the reward for mining new Bitcoin is cut in half. Less new supply, same or rising demand. Simple economics, right? Historically, the halving acts as a starting gun for the next bull run. Look at the charts. 2012 halving, boom. 2013 peak. 2016 halving, boom. 2017 peak. 2020 halving, boom. 2021 peak. The 2024 halving is already here. The clock is ticking. History tells us the market will climb for about 12 to 18 months after the halving. That puts the next potential peak right in late 2025. Sounds great, right? A ticket to generational wealth. But what goes up must come down, and the higher the climb, the more terrifying the fall. The cycle doesn't just predict the bull run, it predicts the slaughter that follows. 2025 isn't just the year of the peak, it's the year the trap is set. The market even gives us warnings if you know how to read the haunted signs. These aren't just technical analysis patterns, they're omens. First, the death cross. When the 50-day moving average crosses below the 200-day, it's a signal that the short-term pain is turning into long-term despair, a truly cursed indicator that has preceded every major crypto winter. Then you have the bear pennant, a brief pause, a moment of hope where the market consolidates, tricking you into thinking the worst is over. But it's just gathering strength for the next terrifying plunge downwards. And the most infamous of all, the Bart Simpson. The price shoots up violently, trades sideways, forming his spiky hair, and then dumps straight back down, erasing all gains and leaving a trail of liquidations. It's a pattern of pure manipulation, a market demon playing with its victims before devouring them whole. When these patterns start appearing on the charts, it's not a suggestion to sell, it's a scream. But what about the people? The ones behind the screens, clicking buy and sell. We talk in trillions, but these are real stories, real lives. We asked for anonymous confessions. The replies were chilling. One person wrote, "I put my life savings into a coin that went to zero. I'm still down 95%. I haven't told my wife." Another said, "I watched my portfolio go from $1 million to 50,000 in 2 months. I couldn't sleep. I couldn't eat. I just stared at the charts, feeling helpless." These aren't just numbers. It's the silent burden of diamond handing your way to zero. It's the shame of telling your family you lost their money. It's the hollow feeling of seeing a dream turn into a nightmare. Many are still holding, trapped by hope, praying for a recovery that may never come for their specific coins. They are the survivors of the last war, carrying the scars, and now they're watching the storm clouds gather again. So, is it really coming? Are the signs here for 2025? Let's look at the red flags, the whispers in the dark. Flag 1. The DTCC rule change. Wall Street is quietly preparing to settle trades on a T+1 basis. This means they can get their money out faster. Why now? Are they planning a quick exit? Flag 2. The Tether FUD never really dies. The questions about its reserves, the foundation of the entire crypto trading market, are a time bomb. If it ever implodes, it takes everything with it. Flag 3. BlackRock. They launched a Bitcoin ETF, bringing billions of boomer money into the space. But what happens when these big institutions decide to take profits? They won't sell slowly. They will pull the rug with institutional force. 4. Regulatory crackdowns. The government let the party run wild, but the sheriff is coming to town. More rules mean less freedom and could suffocate the market. 5. The return of 100x leverage mania. People are getting greedy again, making the same mistakes. 6. Mainstream media hype. Once your grandma is asking you about buying Dogecoin, it's already too late. And the final, most chilling flag. The market is starting to feel exactly like it did in late 2021. The euphoria is back.